Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go.
Hey, Paul. Hey, man. We both got the half zips. It's like we
Are
coordinated.
these quarter zips?
Or quarter zips. Yeah, you're right.
Yeah, these are
Yeah,
quarter
I don't know
zips.
much about fashion.
Right.
My wife just tells me what to wear. So,
Yeah, she does a good job though.
oh, well, thank you.
You know, you don't
Yeah.
look like a complete shadrula like you used to. So
I don't know what that is, but I'll take that as a compliment.
my mom used to say it all the time. So I'm like, I'd have to look it up.
That's an Italian word then, huh?
You know, it's either Italian or Jewish.
Yeah, it sounds Jewish, but it sounds like something you would hear in Spaceballs,
Right.
like Mel Brooks. Yeah.
But I remember we'd be watching the Red Sox or something in like the 80s or 90s, and she would use that term.
And you never looked it up? You don't know what it means?
No, I kind of equated it like, that dude's a bum,
Yeah.
on the baseball field. So I'll after this, I'll call her and be like, hey, what did that mean?
Yeah.
So if I just insulted somebody, well,
All right. So next week you can let us know what that means.
Yeah.
Cool. Well, all right, man. Well, I was gonna share just a quick case study or sidebar to start out here with something that I encountered this week. And it's not the first time I've encountered it with a client going through underwriting where they come back and underwriting says, hey, based on something we found in the medical records, we cannot offer any insurance at this time. And, as I learned more details, which I can't, get into the exact medical records because HIPAA, I'm not privy to that information, but I know enough to know that. And then after talking to the client, really exactly what it was, that he talked to his physician to figure out what was in those records. Really what it comes down to is there's a lot of times when we encounter something that somebody has in their medical records that they had no idea was in there, and they had no intention of ever having something like that in there because it's either inaccurate or maybe it's just the professional opinion of a doctor without any real diagnosis. But it doesn't matter. The doctor, the physician put those notes in the records and now they're gospel. So that can disqualify people. A lot of times it's, a doctor with maybe good intentions or maybe trying to help them out. So health insurance covers something. I don't know. But they might write something that, that says, or at least implies that, hey, this person has sleeping problems. They probably have sleep apnea. They're probably, they probably stop breathing at night, even though the client never said anything like that.
right. Never did a sleep study.
Never did a
ordered
sleep
one.
study. Right.
Yeah.
But hey, guess what? If a doctor says, I'd recommend a sleep study, no insurance company is going to offer you insurance until you complete that sleep study.
Yes, we've seen that.
Yeah. I've seen that many times.
Yep.
Or alcohol. Every time you go into the doctor, they're like, do you smoke? Do you drink? Oh, yes. How many drinks per day or per week? And if you're putting down whatever you drink, the insurance company, I'm not quite sure. Every company is probably a little different, but they might have a red flag where a certain number of drinks means, you're pretty high risk for them. Fatty liver disease or something like that coming down the line, where they're not going to take that risk on you. And maybe you just said a number off the cuff. Or maybe that was that week or the 2 weeks prior, you were just drinking more than usual because it's nice outside and you were hanging out with friends. Right. So be careful what, I guess I wouldn't say be careful what you share because, your doctor, you want to know if something's wrong and you want to have a good, clean bill of health or whatever. But realize the notes physicians put in their documents may not be 100% accurate and may disqualify you from insurance.
Yeah. As we say, words matter. And, and I've seen that before with one of my earlier, very healthy client, mid to late 30s, and the doctor had put something in there when he went in for a totally unrelated complaint.
Mm-hmm.
And this doc for some reason put, possible stroke.
Yeah, possible. Right? Like,
yeah.
Why did they put that in the notes? I don't know.
Yeah, just incredible. And we got through it, but it's just, those things are out there. So just be wary. Just be wary of that. And I think this is especially relevant, Dave, to our military listeners who are approaching retirement, or not even approaching retirement. Just, go out there and get the care that you need, but, don't embellish either, because it might hurt you on the back end.
Yeah, if you're trying to get that, 90% disability rating, like, it's probably not worth it. A couple $100 a month coming your way, that may disqualify you from ever becoming your own banker, at least on your own life.
At least on your own life, which is the most important one,
right? Especially if you're the breadwinner, your family depends on you. So yeah, just maybe take note of what the physician is writing in your records. Get copies of them or look them up after the fact. And correct things in there that aren't appropriate. Because usually it'll take about 2 years of clean records for the insurance company to move past that and say, oh, okay. All right, that was 2 years ago. Now she has a clean bill of health. Everything looks good. We're okay taking the risk on this person.
How do they know if my liver is fatty? You mentioned fatty liver.
I don't know. I have no idea. Maybe they tell that from blood tests. So enzymes, liver enzymes, they can tell.
I get, I take cholesterol medicine. So which there's a lot of, I don't know if it's a big scam or not, but there's, depending on who you talk to, but it's, they do a liver function test on me every year. They do to make sure that the pills aren't like killing my liver or something. And of course I don't drink a lot anyway. So, my liver has to do something other than make cholesterol all day. It's really good at that.
Yeah. See, genes, nothing you can do about that.
Yeah.
Right?
I mean, I'm thin. I was 162 the other day, man.
Down from what?
179 in June.
Yeah. Yeah. That's quite a bit difference, man.
Yep.
Wow. Congratulations. Paul's adopted the skipping breakfast diet.
I did OMAD the other day.
I don't know what that is.
Like 1 meal a day. So I didn't eat until 6 o'clock at night.
So that's the Stanley McChrystal diet.
Yeah.
Right. Yeah. Stanley General McChrystal used to only eat 1 meal a day. Therefore, all the guys that worked with him only ate 1 meal a day.
1 meal a day.
Yeah. That'd be terrible.
But anyway, no, I do. I have coffee in the morning. That's it. And then I'll eat lunch.
Yeah. Yeah. So, hey, whatever works.
Yeah, it's helped. It's helped tremendously just because I really like to eat. Everyone knows that. I'm good at it.
Yeah.
And
we all have our own unique abilities.
Yeah.
So yours just
anyway. So interest rates are high, aren't they, compared to what most people are used to? All these spoiled millennials.
Yeah.
With their 2% mortgages and stuff.
I was just at my neighbor's Saturday night, having some drinks and hanging out and getting to know all the neighbors around here. And they had some friends in from South Minneapolis who were talking about, oh, we want to move out here, but man, I got that 2.9% interest rate right now. And that's really hard to give up and come get a 7% rate or 8% interest rate right now. Like, that's the difference for the same price house of thousands of dollars a month difference.
Correct.
It's ridiculous.
Correct.
Yeah.
Yep.
So this is pretty reminiscent. If you guys pull out your copy of Becoming Your Own Banker, Nelson actually talks about on page 12 how the infinite banking concept got started. So reread that story. But Nelson was in a pinch. It was the 1980s, and he talks here how the prime rate rose to 21.5%
at its peak. Yep.
At its peak. And then these variable interest rates on loans adjust accordingly. And all of a sudden, it kind of reminds me of premium finance, life insurance.
Oh,
which
goodness.
I don't want to get into that, but I'm working with one guy right now who is in a real bind because he's got a lot of premium finance policies. It's all variable interest. The interest rate spiked, and now he's got to pay the interest to the bank and fund the policy premium. And it sounds like a mess. I don't want to have anything to do with it.
Keep it simple, stupid. It's that's how I feel about the infinite banking concept. It's quite simple. Whole life insurance is quite simple. There's no need to do anything fancy. Take the money you're saving, use it to pay premium.
Yeah. So hopefully we're not entering the same thing our parents went through in the 80s.
Yeah.
But I
don't think it'll get that bad, but
we've gone from 2.5% to 8% in 2 years.
Yeah.
So, if we continue at this rate, yikes.
Yeah. Everyone's discovering that I wasn't as adept of a realtor as I thought.
Yeah. Right. Well, everybody was a realtor. I talked to so many people who are like, yeah, I quit my job and now I'm a realtor.
Right.
That was back in 2020 when
I just I sold 2 houses myself in 21 or 2020, whatever year that was. 21.
Yeah.
Wasn't hard.
I sold a house myself. Sold it with a realtor.
Yep.
It depends on the environment, and it depends on how quickly or what you need. I don't know.
Yep.
But it's worth a try because pay a lot of commission. But
yeah. So mortgages, 30-year notes, folks, are at 8% or approaching 8%. And
in October 2023, as we record.
October of 23. Markets are starting to slow down in a lot of areas or correct, or there's some discounts. Hey, we'll pay your closing costs. Or I even saw an ad on Facebook for Jeep Grand Wagoneer or Jeep Grand Cherokee or something, $10,000 below MSRP.
Wow.
Where for the last several years have been markups on cars. Dealers are marking them up. It's just ridiculous. So things are you're starting to see some cracks and some maybe, I don't know I think the damage has been done. I don't know what it's going to look like. How long the Fed's, this is the problem, folks, with this banking system that we find ourselves in, is that we don't control any of it because it's not a free market, right? The Fed controls the rate. The banks have to, they're part of the system, so they're going to charge accordingly, right? Because they need to make money too, even though they're making money off money they create out of nothing. But anyway, but right now, my policies are all sitting at between 5 and 5.5%, I think, for the policy loan rate. So I can get to money, Dave, way cheaper than all these other folks out there in the wide world. Can I?
Yeah. And the only regret you have is that you don't have more capital that you can access at that rate.
That's right.
You and I were talking, let's say you're going to build a house soon, right?
Yeah.
And you're going to have to get a conventional mortgage.
Yeah. Construction loan that then ends up turning into a traditional 30-year mortgage. Actually, I'm doing a 5-1 ARM. Yeah. Folks, to be perfectly honest. Yeah.
Yeah. Because you're going to be responsible about it and you'll have the ability to pay that off. But you and I have a couple irons in the fire elsewhere. And if these things pan out like we kind of expect them to, we're going to need somewhere to put all of that investment income. So you and I were talking before this, wouldn't it be cool? Instead of, one method of paying down a house, right, is just, you pay big chunks towards the principal. Maybe you save up $10,000 and then take 10 grand, write a check to the bank towards the principal, knock the principal down. It moves you several months, maybe a couple of years down the amortization table, depending on where you are in that table. And then, every payment you make after that, more money goes towards the principal, less to interest. So it just kind of snowballs and you can pay that off much quicker. At the end of the day, if you do that, you've got a house and you've got no money. You got no capital, right?
That's right.
And if you want access to the capital, you have to go ask for it and then pay the fees and pay whatever the interest rate is at that time, which is going to be higher than a 30-year mortgage rate at that time, because it's a line of credit instead of a fixed mortgage. So yeah, you could pay your house off like that. But you and I were talking and you had a different idea. about practicing becoming your own banker and truly being the bank when it comes to your home mortgage.
Yeah. So I'm going to contradict what I've said in the past just because I'll be in a position where it really won't matter one way or another. Because I've talked about, Dave, never paying off my houses ever. Just keep refining them as they increase in value, and it makes sense because interest rates or whatever, and pulling cash out, putting that cash to work either to loan repayment or new premium or future premium, and doing it that way. But then I got to thinking, maybe it would be fun just for it would be a good thing to do anyway. Don't do, one of Nelson's rules is don't do business with banks outside of, checking or savings to, run your household. Right. But maybe it would be fun to do it and just be free from the bank, and then take the money that I was giving to somebody else's bank and repay the policy loan that I used to pay, and it would be probably multiple loans, right, to pay off the mortgage.
Mm-hmm.
Be an honest banker, don't steal the peas, put the peas back on the shelf, and then be totally self-sufficient. I have met my needs, and then start working on, okay, now I need to build back up so I can start meeting other people's needs for finance, as we kind of do now with our private lending business and stuff. So I thought it would be just cool to do that, just because that's what this is all about, right? I'm holding up the book for those of you listening on the podcast, but it would be that's control of the banking function, and that's what Nelson envisioned for people. And I don't have to care what the Fed is doing with rates. I don't much care now, other than it's just annoying and the timing could be better. I'd rather have 2%.
Right.
Yeah. Way better. But yeah, I'm seriously considering doing that just because why not?
Why not? Especially if you're getting a rate at 8%. You can borrow against your cash value at 5%. So what you're talking about is, say you've got an extra, with a bunch of investment income and your retirement income that you don't need to spend. Let's say that's $100,000 a year. Well, okay, you could take $100,000 a year and just throw that towards the principal. But what you're saying is, I'm going to take that $100,000 a year and apply it towards premium in policies until I get to the point where my cash value, my principal over here on the left with your house is coming down with every payment, right? And your cash value is rising every year. At some point, that cash value is going to overtake what's remaining, the outstanding balance on your home. At that point, you could reach in there, take a cash value loan, pay off the entire house, be done with that completely. And then all those payments you were making towards your mortgage, now just redirect those payments back towards repaying that loan.
That's right.
Right? And now it's a principal only loan, and it's a much lower interest rate than what you were paying. And you're not sitting all that volume of interest. When you look at the amortization table, that volume of interest is
over 100%.
Pages. It's 100. Yeah. I think my mortgage was like 105%.
105% if you let it go all 30.
If I go all 30 years, just pay my required premium or mortgage payment, 105%. So I'll pay over twice as much as what my house is worth.
It's crazy.
It is.
Yeah.
So if you could recapture that in premium instead, oh my gosh, I think that absolutely. Why wouldn't I do that?
Yeah. And it's tremendous peace of mind. It's the infinite banking concept in its purest form. We started with cars, and maybe we did some education. We talked about private financing, private school for the kids. And then now finally, someday paying off the mortgage, and then transitioning into, again, other people's needs, but by then there's going to be other people. Maybe maybe 10 years, 10, 15 years from now, you and I could have grandkids easily.
Oh man.
I hate to say that, but Jack will be 26.
Yeah,
in 10
easily.
years.
Yeah,
Right?
for sure.
So then the cycle starts again, and we do what Nelson says in the book when we open up policies on our grandkids right out of the gate,
Mm-hmm.
and set them up for success as well. But yeah, so another thing to consider, Dave, too, is, and we've discussed it, but it's I'm repaying that loan. I'm putting those P's back on the shelf. So not only am I freeing up that capital again to use again, I didn't get just single use out of this capital. I'm going to get multiple uses out of this capital.
Yep.
But I'm also, remember, I'm part owner of this life insurance company. So I'm helping, they're like, wow, Paul's repaying these policy loans. And I'm going to, yep, it's going to come in every month, guys. That's capital that they can then lend to you, or lend to some of our clients when they have to take a policy loan, or maybe they go buy some bonds with it or do a joint venture or whatever they're going to do with that incoming capital. It helps make the company that I'm part owner of more profitable as well.
Right.
And that's a wonderful thing, because they pay me a dividend every year.
Yeah, they do. And they have for, well over 100 straight years.
118
for that
particular
for that particular company. Yeah.
Right.
So, yeah, there you go. And and there's an interest rate, there's a loan interest cap in these contracts.
Yeah, 8%.
8% with some companies. That's the cap. So,
the floor is zero.
The floor is
You
zero.
never see that.
Yeah, no. I think the lowest.
I don't want to ever see that.
Lowest you'll probably see is 5, right?
Yeah,
I think
so.
That's the lowest we saw since 2008. All that, the whole every interest rates being at zero, basically the Fed fund rate.
Right.
Life insurance companies still need to turn a profit. Money's not free.
I want them to make. I want them to make money, because I want
absolutely
them to pay a death.
Because I want a dividend.
Yeah. Right.
And you want that death benefit, or your family wants it. So, but imagine being capped at 8, and we go back to 1980s, and it peaks at 21.5. Wow.
Yeah.
What kind of position would you be in?
And I think Nelson says in here, I'm fairly certain that he's like, when he had that epiphany, the baseball bat right across the face, like, hey, silly, you can get to money at, there it is. On the bottom of page 13 on the left, he says, you can get to money during these awful times at 5 to 8% from 3 different life insurance companies through policies that you own.
Yep.
I have that bracketed and underlined. So here he was at 21.5%, 20%, 18%. I'm sure he had several different rates going on. His partner, what he doesn't tell you is his partner had bailed. He took on all that debt and eventually paid it off. But folks, he was paying in 1980, he was paying, I think they said about $18,000 a year of life insurance premium. That's not in the book. I think that's just from, firsthand knowledge from his family.
Yeah, that's a significant amount.
But you run 18,000 through an inflation filter, and what that value is today, it's probably $65,000-$70,000 a year of life insurance premium.
Oh yeah.
And then how many people do you know that pay that much premium? Well, outside of you,
I know quite a few.
Our clients. Yeah. I mean, like, you don't know anybody, right? Like,
yeah. No, everybody else thinks that's crazy.
It's crazy. I love telling them though.
I know, it's fun to shock them. Like, wait a minute, Paul, you seem like a smart guy. What are you doing? Why are you putting that much money into life insurance?
You think I should put my entire military pension and pay that as premium? I was like, yeah, and your disability. Huh?
Yeah.
Maybe that's not the first thing I should say, but it has been the first thing I've said to people, just for that shock effect.
Yeah.
When you know, you know.
Yeah. Yeah, you're good at the shock effect. Yeah.
Yes.
But that'll be fun. Man, I really like that idea, because again, when rates are low, people are like, well, why would I ever borrow from my policy? I'm not going to pay 5% to borrow the insurance company's money. I'll go to the bank and borrow 3%. Great, do it.
Great.
Dave,
but guess what? We heard that a lot in 2020, didn't we? Right. When we were first starting the businesses and stuff. We heard, well, everyone is just caught up in the rates. They're ignoring the volume, though.
What they're doing is tripping over dollars to pick up pennies.
That's right.
They're arguing over 2% of an interest rate without even thinking about the terms or what that money is going to build for them, and who they're benefiting, them or the banks. So the process of banking continues no matter what the interest rate is, because Paul and I were storing capital when interest rates were very, very low. It doesn't mean we were just using, I mean, I used bank loans. I didn't just use cash value loans.
Correct.
But now that rates are going up and may continue to go up, who knows? The future is unknown. We're going to be in a pretty incredible position having access to money at somewhere between 5 to 8%. No questions asked.
And the other thing is, right, I don't have a repayment schedule.
Exactly.
And people they find that hard to believe, but yes, folks, there's no repayment schedule in a life insurance policy loan. You can set one up if you like. If you want to do automatic drafts, you can absolutely do that for that particular policy or that policy over there. You can do all those things, but it's not necessary. You control the banking function. That's the whole point of this.
Yeah.
Yes, interest is going to accrue, but again, you're in control.
And your credit score is not going to take a hit.
Nope. That's right. No credit score, no questions asked.
Yeah.
No nonsense. It's just great.
Right. Nobody's sending you letters saying you owe us this much money. Right.
I got my IRS letter yesterday.
Yeah. Those are a kick in the stomach.
No, it just is like, thank you for being so productive. Cut us another check. Like, why?
Thanks for working for us.
To do that?
Yeah.
I hate it. Oh, God, it's awful.
Your tax money is going to good use.
I'm sure. Yep. I'm helping. I'm funding both sides of war, just like the good bankers have always done.
And if I'm paying so much taxes, why don't you just print more money to pay my taxes? Because apparently printing money doesn't mean anything.
Right. Just print it.
Just print it and pay my taxes. Right. Ridiculous. Yeah. Anyway, we digress.
So what we might do, folks, over the next, maybe sporadically, is we're going to we hit upon, this part of Nelson's book today. And, really it was tying in interest rates and tying in, the epiphany that Nelson had and how that, the honeymoon is over. I mean, I feel like I'm actually talking to some real estate investors, because some of you are our clients and you do IBC and you get it. But a lot of you, most of you don't. And I don't know why, really. But the honeymoon's over. And I can get to cheaper money.
Yeah.
So anyway, without a repayment schedule.
Yeah. Which
without
means
interrupting compounding.
Who's going to have more access to opportunities?
Me.
You. Because you can get the money much cheaper. It doesn't cost. I mean, imagine having to borrow at 20%. Like, your return on investment, you better be making 40%. Right? If you got to borrow at 20, like, that's crazy.
Like, and at that point, right, who's going to buy that deal now? Nobody.
Yeah, I think we're going to see a lot of that with, these commercial properties refinancing, and people bailing, or fire sales, whatever it may be. But it's going to be untenable for a lot.
I mean, I'm in one of the syndications out there, and it's totally, it's fine, whatever. But the underwriting that was done 2 years ago is no longer valid.
Right.
And could you have predicted this? I don't know, maybe, but with an understanding of, like, the business cycle. And I encourage all of you to read some sort of, one of the Austrians, read somebody that talks about this, so you can look at what's going on and therefore will know what to do. But you've got to be able to anticipate, like, they can't hold rates low that long. They did it way too long anyway.
Completely artificial.
And anticipate that. And if the deal works if it doesn't work at 8% or 7%, maybe you should rethink your strategy or rethink the price that you're purchasing this thing from. So anyway.
Yeah, because usually what happens when interest rates skyrocket too, probably people are losing their jobs and have less income. They're not going to be able to pay as much for rent. They may just stop paying rent altogether, make you kick them out.
Yeah. Be careful where you buy.
Right. What state are you buying in? Are they protecting you, the owner, or are they protecting the squatter that's not living up to his end of the contract?
Yeah, that's right.
Right. So, yeah, a lot of variables. I prefer to stack my capital somewhere that I control, that I know there's guarantees. I know it's going to go up. I know it's going to be there when I need it at a favorable rate, especially these days. And if rates drop again, great. Maybe I go back to, borrow from a bank if I want to. But I have the choice.
Yeah. You have a choice. The banker can do whatever he wants. Someone who's conducting IBC can do whatever he wants. And we do.
Yep. Indeed. All right. Well, that'll wrap it up. But yeah, I think what you were saying, I don't know if you fully finished your thought. We're going to probably start doing a book review. Yeah. I don't know. You
must
trailed
have
off.
ADD or something.
Yeah. Yeah. But, I think we'll start going through Nelson's book, chapter by chapter, periodically, and just, a deep dive into one of the chapters. Read the book. And
I love that book.
Yeah.
I'm a nerd when it comes to it, I guess. I don't, there's some people that didn't enjoy it. Okay. That's okay. But I don't think you can read it enough. I really don't.
Yep. You'll get something new every time.
Yep.
All right, everybody. Hey, until next time, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.